let's talk fundamentals a little bit. They put the fun in fundamentals for a reason. Fundamentals are fun. I think fundamentals are fun. Fun to think about. So I've got a technical system. You guys know that. And I'm going to do my best to follow it closely. However, that technical system is based on certain fundamentals. And one of the main things I'm going to talk about and speculate in this video is the Trump administration, the stock market, and what that's going to mean for risk assets. However, for example, a fundamental is, and how it affects the system that I trade, I want to trade the strongest assets, and there's a couple ways to do it. One of them is to look at the assets that have performed the best in the past with the expectation that they will continue. For instance, gold has been one of the best performing assets historically, 10,000 years. Even in today's age, last year it had a monster year. Why should it stop? Our system works well on gold for 100 years. Same with the US stock market. And we look at Bitcoin, when we get to the crypto space, there's not as much history there, so we have to use more fundamentals. If we look at the coins with the longest history, Bitcoin has been awesome. It's the best one. It has the most history, and it's done the best. But ETH, up until this cycle, it was right up there with Bitcoin, and it's really underperformed. It hasn't done well on our system, and it hasn't done well in general. I mean, it's up a bit, but it's like so far under all-time highs, when a lot of these other things are so far over all-time highs. So we can just shut the system down and trade a different asset, but I also like use fundamentals of why, and I've talked about this. Personally, I used to send, so when I trade crypto futures, I transfer with a wire transfer, ACH, US dollars onto Kraken. And then I exchange those US dollars into USDT tokens, Tether. Then, we don't need to get into Tether. I try not to think about it or work. Then I transfer those USDT tokens to a different exchange, a crypto perpetual future exchange. In past cycles, I would transfer it using the ETH network. I now use the Sol network because the Sol network is cheaper and faster than ETH. And there's a host of options that are faster, cheaper and faster. Cheaper and faster on Tron, cheaper and faster on BNB. Why would I spend more and have it go through slower? There's no security advantage that I care about. Bitcoin's the better money, and Solana's the better network. So where does that leave ETH? If you remember, those of you guys who were here in 2020, and we'll get to the Trump and the stock market soon, so hang on. But those of you guys who were here in 2020, 2021, you're going to remember the mania was on ERC20 tokens and on NFTs on ETH. So ERC20 tokens were like Shiba Inu was an ERC20 token. That was an Ethereum token. People were launching tokens on ETH, and people were trading NFTs on ETH. And that was ETH season, ETH mooned. The problem is ETH is slow and doesn't scale very well. So when people were trying to trade, I think Ape was an ETH token too, right? Fees went out of hand. People were spending it's like $60 for a transaction fee. It takes minutes to get there. And there were situations where people were burning on fees, like sometimes huge amounts. I want to say like huge amounts on fees, maybe hundreds, thousands, I don't know. And the transactions wouldn't even go through. So all of that activity is not on ETH in 2025. 2024, it moved to Solana and moved to BNB, but it's really moved to Solana. Trump launched his coin where? On Solana, not on Ethereum. So what's happening is the activity is moving away from ETH because the security advantage it offers doesn't, over Solana or BNB, doesn't make up for the fact that people don't care. They want it to be cheap and quick. They don't care. And I think they're right to not care. So ETH is in decline. And this would tell me fundamentally to not long ETH using our system and to trade Solana instead. And I'm not going to get into it, but I'm also like want to look into filters of how can we trade newer things. And the idea is to wait for bear markets and see what went down the least. I don't want to buy what's up the most if it's a new coin, because it could just be pumped. So the way I think about ETH is it's looking like MySpace when Facebook came in, Instagram came in, Snapchat came in, and MySpace is still there. MySpace.com still checks out, but it's not what it once was. It had a first mover advantage, but there's no moat around it. There's no reason it's going to be the one. So that's an example of using fundamentals with my trading system. Okay, not going to trade ETH. It's tempting to think there's going to be an ETH pump. Anyways, now we get to Trump administration. So he's inaugurated. I was just talking to my friend, the guy who got me into Bitcoin in 2020, although he was in it from 2016 or 2015, something like that. Me and him were talking, and we both agree they're gonna try to keep asset prices high, particularly stocks. Why? Because Trump is backed closely by Elon Musk, Jeff Bezos, Mark Zuckerberg. I don't know, today, are they the three richest men in the world? Three of the richest men in the world. So Elon Musk even he's going to have a role in the government. So it's hard to imagine there's a 50% bear market for Elon Musk while he's in the US government when they have levers and controls. What will those levers and controls be, though? That's a question. That is a question. That's a question we got to answer. Now, all that said, before we get into what the Trump administration is going to do, important, the stocks market is really pumped right now. There's a couple things to look at. There's three things we can look at, three main things. The first one is margin debt. So traditionally, or generally, brokers are going to let you trade stocks on margin. I haven't traded stocks in a while. What is it, 50%? 50% margin. So if your stock goes up, you can buy more stock, use it as margin. So margin is set a new all-time high. Okay, which is stock market leverage set a new all-time high. What that means is people have maxed out their buys, and it represents selling pressure, forced selling pressure. If the stock market starts to decline, if there's a significant correction, there will be margin calls. People will be forced to sell their positions. So it's quite bearish. The most bullish scenario is people are cash on the sidelines and there's no margin, right? What happens is people enter the market, they start to buy, now cash is deployed, then they buy on margin. Now that they buy on margin, the stock market is risk, right? There's less upside because where is the buying going to come from? People already bought on margin. There's more downside because where's the selling going to come from? There will be forced selling if price declines. The more price declines, the more forced selling. So that's a risk. And that fundamentally is one of the main risks. There's also, this one's a bit more iffy, but is the price to earnings ratio. This is something people look at historically to tell if stocks are valued or undervalued. A PE ratio today is something like twice the historical norm. So it's pretty high. It can stay high for a while. Maybe this is the new normal. Could be. But it's something to be aware of. In previous tops, PE ratio gets inflated. And also, we go back to 2021. What happened in 2021? At the end, December 2021 was the last all-time high in margin debt on the stock market. Those people were forced to sell, and we had like, what, a 40% decline in the NASDAQ. We had a really serious bear market. A lot of forced selling. Now, forget the NASDAQ. Forget the margin debt. We talk PE ratio. The other one is the Buffett indicator. So the idea is the gross domestic product of the United States is should be roughly equal to the full capitalization of businesses in the United States, right? Does that make sense? It makes sense to me. GDP should roughly equal the stock market capitalization. And if we look at the index, the capitalization of indexes, they also don't include small businesses. These are only larger businesses that are in the indices. But we have a scenario where the stock market capitalization is almost like double GDP. So that doesn't add up. It doesn't make sense, right? How is it that stock market capitalization is worth twice our gross domestic product? So stocks could come down almost 50% to be in line with historical norms. And yes, in the past, at these highs, these mark tops. Does that mean a top needs to happen now? The top could happen later this year. It could happen next year. There isn't really a way to know, right? These things can run for longer, but to me, I'm like, all right, this is dangerous. This is pretty dangerous. But on the other hand, Musk and his people, they're going to want to keep the market pumped for their own interest. Just incentives. Why wouldn't you want to do that? Why wouldn't you want to? The question is what tools they have, though. So Trump pumped the fuck out of the market in 2020. The catalyst for it was COVID, where people were okay with it. It led to craziness. The shutdowns in business, the disruptions to supply chain, led to let's print money for people, massively expand the money supply. People were okay with that, kind of knowing inflation was going to come because y'all were giving us money. So, okay, now we're here later. What happened? End of 2021, inflation was getting out of control, 10% a year. So they're like, this is going to be very unpopular. Unless we do something, we need to. And they isn't just the Trump administration, but the FOMC, the Federal Open Market Commission, which is in control of interest rates, is ostensibly independent from the from the presidential administration. They're probably in bed with each other in some ways, but they have to keep inflation low, and they need to keep, this is the double mandate, inflation low, employment high. And they do it with interest rates. So interest rates were at zero. They had printed a fuck ton of money. So they're like, let's jack up interest rates. So over 2022 to 2023, they raised interest rates from 0% to what, 5%, something like that. And that led to all the margin getting wiped out. Clean flush. Solana went from like $280 to $7. Bitcoin went from 69,000 to 14,700. ETH went from 4,400 down to like 800, 600 bucks, right? The stock market's down 30, 40%. That wiped it out. Now, coming into 2025, inflation is moderate. It's pretty low. It's not as low as they want. It's like, what, around 3%, low 3. So it's not at the 2 or lower that they want. And inflation is super unpopular. So it's super unpopular. Now, Trump doesn't need to worry about re-election. So it's possible he'll just try to do whatever benefits him. Even if it's unpopular from the public, that's possible. They also have aligned 3 Republican branches of the government, so they can push through a lot of things if they want to. But what's the actual mechanism? It's hard for me to see what the actual mechanism is going to look like, right? We go back to 2020, the COVID crash. We're coming out of a bearish period, and the COVID crash severely wiped margin out of the system, which allowed for this run-up as well. The COVID crash, I believe, was important to the run-up that happened in 2021. Now, right now, interest rates are at around 4%, so they can cut interest rates. That's their main tool for stimulation, is cutting interest rates. So I guess maybe that's the answer, is rates are going to keep coming down. That's going to make the cost of borrowing cheaper. It's not like printing money, though. I mean, it does cause the money supply to expand. It's hard for me to see them just printing money, helicopter money, like they did in 2020. And also, if inflation doesn't come down, can they really stimulate like that? I don't know. What are the tools? So it's easy to say the Trump administration wants to pump the stock market. It's harder to say what are the tools they're going to use to do it. Can it be done through policy, like cut taxes? I see what do I see? Cutting of interest rates, that's the obvious one. They're currently projected to be small cuts, so maybe they're going to be larger cuts, but simply cutting interest rates might be enough. That said, with so much leverage and overvaluation already, if they're able to keep the market going higher, say there's another considerable rally from here, that could lead to a massive crash. If margin debt's already at record levels and there's a significant run from here, it only means that there needs to be a liquidation clearing event. And to me, that's where the greatest opportunity is as well. It's going to be after the wipeout. And all these things are correlated, right? People are forced to sell. They might sell Bitcoin instead. They might sell their gold instead. I also haven't talked about real estate. I don't follow real estate that close, but I do know the demand for mortgage is way down. I see it. It's really hard to sell a house and get the price that you want. It's hard to buy a house and afford the mortgage compared to rent, especially also if you want to do it as an investment property. Good luck getting a rent to cover a mortgage now, where you can just buy it and then you're cash flowing at the current interest rates, which aren't really projected to go down so much. Maybe supply is going to keep opening up and supply opening as boomers pass, also not good for prices. So there may be a risk there. I don't know that there's like a leverage risk. Like in 2008, ordinary people were buying a bunch of houses on leverage. People with ninja loans, people with no income, no job, getting the leverage to buy houses. There's nothing like that in the housing market right now. Or is there? I don't know. So comment down below. fundamentally, I'm just going to trade my system. The way my system will protect me from crashes will be, one thing is, it doesn't buy breakouts under the 200 moving average. So if price wants to come down and go into decline, it needs to clear above the 200 moving average and be back in an uptrend to be buying breakouts. And that would have kept us out of some significant bear markets over the years. So that's one thing. Another thing is, I guess that's the main thing. There's certain filters. It tends to add as price goes up, or add onto positions, and it tends to cut exposure as price goes down. So our system will have a losing year if there's a significant bear market. However, it would probably be a lot less bad than just holding, right? I think, for instance, in 2022, Bitcoin went from, I don't know, it started the year at 50 something and it ended the year at like 17. So it went down, what, 80% in the year, 70, 80%. I think our system only had like 1 or 2 trades. Potentially no trades, actually, depending on the system. You could also, I found that the systems perform better to buy dips regardless of the moving average. But if you're super paranoid, you could not buy dips under the 200 moving average also. So anyways, what's going to happen? I don't know. I'm just following my system and also trying to keep revenue coming in other ways through YouTube and through staying busy at work, and just trust if I contribute to society, things will be all right. Try to have a big income. Having a big income or a bigger income is important when it comes to what can happen in investments. If you have a good income, you can replace anything given time. So anyways, appreciate y'all. Much love. Talk to y'all soon. Peace.